Welcome to CSI Chat, where every topic's fair game. From finance to mysteries, we'll never be the same. Our hosts an accountant with a knack for a joke. We'll dive into the details and laugh until we choke. CSI Chat, where the numbers beat the fun. We'll explore every subject under the sun.
All right. Well, we are very lucky today to be joined by somebody that I've known for quite some time. He leads training sessions at Constellation, and I talk with him on a fairly regular basis about different accounting topics. We're also avid readers of a lot of the information that it gets produced out of Veritas. But let me do a bit of a formal intro. So we're joined today by Anthony Scilipoti. A lot of people will know Anthony, especially obviously in the accounting world, but he is the president and CEO of Veritas Investment Research. For those that don't know, Veritas Investment Research is Canada's leading independent equity research firm and is staffed entirely by CPAs, which is one of the reasons why we like, especially as CPAs, we like a lot of the stuff that Anthony writes because it's all written by CPAs. He's a prior board member of the Accounting Standards Board. He's lectured at York University for several years, and needless to say, you know, whether he likes it or not, Anthony is certainly an accounting guru, if there ever was one. But before we get into the business talk, Anthony, I know you're also a diehard Leaf fan, but for better or for worse, it's been a while. You know, and this is not a sports podcast. There you go. You got your Leaf showing there. But I got to get your thoughts here. Leafs don't make the playoffs. Before we get into business talk, give me your high level thoughts on the Leaf season and how the offseason has started to date. Are you happy as a Leaf fan, or are you not happy?
Everything requires context. So I'm going to answer the question, but I'm going to provide context. I am I would say, diehard fan. I grew up a Leaf fan, and I actually felt in 2005 during the lockout, when nobody wanted to buy Leaf tickets, I, being the value investor that I am, bought a set of season tickets for the Leafs. I was forced to buy a season set of tickets of the Raptors, along with some membership fees, all of which I didn't really want. But to me, at the time, I felt, you know what, I'd really made it. Here's this son of first-generation immigrant Italian family. I bought a piece of real estate. There's only 21,000 seats. Yeah. They're not putting any more in. I have one. I'm going to have it forever. And like it was, I almost thought that I had made it. It was it. I just did. I thought I made it. Like a lot of things matter, but that's like, you can't replicate it. And the years of pain, suffering, I think it's interesting you asked the question now. I think it's reached the pinnacle. And I became, because the players, frankly, don't give a shit. And the fans give a shit more. Mm-hmm. And that makes me angry. I stopped going to games this year. I sold all my tickets after I saw when Nylander was hurt. And they panned on him in the player's box, and he gave the middle finger to the camera. Mm-hmm. If that was me, as Tivolak, the general manager, I would have told him he's no longer fit to wear the emblem on his chest and should sit down, and he'll play for the team that will decide where he goes.
Yep.
And I think we need to make a stand. These playoffs actually make me angry because I'm watching two players in the finals, which we let go essentially for nothing. Mm-hmm. And what I've determined, and I've actually thought a lot about this, is that, and it'll probably help think through our discussion. People run companies. People run sports teams. Mm-hmm. And the people that have been running the franchise that we call the Maple Leafs don't really care about winning. It doesn't bother them as much as it bothers the fans. Mm-hmm. And It's different, it's owned by corporations. My
Public
other
corporations. Yep.
Correct. My other favorite team right here, okay?
Oh yes, the Pittsburgh
Thi-
Steelers.
This is a team that breathes and breeds champions. They don't know, in fact, they don't know how to lose so that they can pick up a first rounder. They
Hmm.
don't like tanking is just not in their but like Mike Tomlin didn't have a losing season. He can't do it.
It's unbelievable.
So, but this is run by a family and there are issues. Okay. But it's run by the Rooney family is a diehard Pittsburgh family, wealthy, but they want to win. And when you hear the players talk about, I'm going to play for the Steelers. Oh my God.
Hmm.
This is, the black and gold. When I put it on my back, it means something.
Yep.
And if wearing the blue and white does not mean something to you, please don't come and play here. So that's what I would do. I would bring players that want to play here. And last point I'll make, you saw it this year with Montreal, and Montreal is an interesting. I hate Montreal. I have to say, I'm sorry, but I respect them. There's difference.
Hmm.
Emotions is one thing. I leave emotions out of decision making. From a team perspective, I respect them because when players play for Les Canadiens and they put the shirt on and that C-HAB logo, it means something. And you can see it in how they play. You can
Yep.
see it in how it matters. They
Yep.
got to the semifinals this year with a ragtag team. So there you go. That's maybe that's more than you wanted, but there's a lot there, and there's way more to talk about. But I think until we as fans really make a stand, and I think it started this year was really I saw it among a lot
Yep.
of fans that and those of us that are actually cutting checks, significant checks to become season ticket holders, they're very frustrated.
Yep. Yeah, when you watch, we're sitting here doing the interview with Vegas and Carolina, playing in the finals. Not, I wouldn't say those are hockey first markets, but you got to tip your
No.
hat to both of those teams and the management
Yes,
teams that got the Carolina's been knocking at the doorstep for years, and Vegas is right there every single year. It's impressive. It
and
is a
they're a
really,
franchise. They're an expansion team.
absolutely,
Like
absolutely. It's absolutely.
I bet you walk down the street and say, "Do you know you have a hockey team here?" And they go, "Oh yeah, really? What's their name? Can you name a player on the team?" I bet you walk down the street in Vegas, nobody knows.
Yep. Yep. Yeah, no. I think there's, yeah, it's impressive what absolutely, absolutely. Toronto, let's hope next year. Yes, I don't think it's going to be next year. Maybe the next 2 years or 3 3 years. I don't know, but yeah, they've got some work to do, Anthony.
Anyway,
So let's revert. Let's talk about Veritas to start with. We got to give some people some perspective. You founded Veritas. Again, we're here to talk about the stock market, about companies, about valuing businesses, about accounting, all that. That feeds nicely into Veritas. Give us some perspective. Take us back in time. Why was Veritas initially founded? Why'd you start the company?
so at the time I was, the young buck, and I was teaching at York University, and Al Rosen was the head of accounting at York, and I was working in my father's furniture business after I'd finished working at Arthur Anderson, and then I started working doing litigation work. So I was doing litigation. I really took an interest in forensic work. And what started out one day a week working with Al became 5 and 7 days a week. And at the time while we were teaching, and this is now 1997 and onward, we were talking about Laidlaw and Lowen Group and Newcourt Credit and how they were cooking the books. And one of the students was Michael Palmer, and he was head of research at the brokerage firm called First Associates. And he says, "Can you guys write about this stuff?" And I'm like, I suppose so. I mean, I don't know. Frankly, I have to say, I didn't know, as he likes to say, he's retired now. As he likes to say, I couldn't even spell stock. And I would say that. I understood the financial statements, but I didn't understand what that meant in the stock market so much.
Yep.
And to me, I just noticed that this didn't make any sense, how they were reporting whatever earnings or whatever cash flows. This was something not sustainable. This was a one-time whatever. And so these are the things we talk about, and then, looked at governance and so on. And so it kind of started by accident in 1999, writing about IMAX and GIAC computers and Royal Group Technologies and CallNet. And then we wrote about Nortel. And this is February of 2000. And, I think about what we did at that time and what I had written. And, when you're young, you don't realize all the implications of your actions. As
Yeah.
you get older, you start realizing that when you put your foot down, the sound that it makes and the vibrations that happen affect many that you know, and many that you may not know, and many that you may never know.
Mm-hmm.
And as you become more ingrained in your business, in your life, in your family, you start realizing that this could have ramifications on everything that I've built and everything that I've done, and people are going to think certain way and that certain, and it creates actually inertia.
Yep.
Whereas when you're young, frankly, you don't give a fuck. You just,
Yeah.
you write and you write and you don't realize. You say, well, look, this is what I see.
Yep.
You don't realize that when you say sell a company that's it's the largest market cap company in the country. It
By a
represents
mile. By a mile.
40% of the index. The next largest company was 5% of the market cap.
Wow.
Like you can't even, 10% of the market cap was RBC. And you can't compare that. Like you don't know the ramifications of what you're doing. And yet, that's what we did. And so, we got it right. Thankfully, I say thankfully, it's very sad. But
Yep.
at the same time, if you're going to do something bold, make sure you're right about it and you've done your work. And always, I think, that's a key thing of what we've done. We've just attempted to tell the truth, not worried about what others might think. And that's really the story. And so my partners at the time that started it with me, Al Rosen and his son and Mike Palmer, they've since retired or been bought out. And it's been a journey. It's 26 years later, and here we are.
Now, you're a little bit unique in that you only hire CPAs. Why the focus on CPAs? What do you think they bring to the table when trying to research, the public companies, especially here in Canada?
Well, I've always said that accounting is the language of business. And it's very interesting. And it's very simple if you compare it to reading, because we talk about language. And I studied Shakespeare. I did that because I was fascinated with his skills of writing. And it's a good example. If you read, I don't know, your grade 9 class and you read The Merchant of Venice or whatever one you were supposed to read, that's the one I read. You read it at a certain level and you're grade 9 and, you start understanding all the intricacies that there were no women in the play and the women were being played by men. And that's a double entendre in that play. And then you start going, well, that's really interesting. And some of the double and the words, the way they're in, and you understand that at a certain level. But there are people that do PhDs in Shakespearean writing. So every word and the way the I forgot the word, but it's a pentameter, the meter in the poems. It's very scripted. It's almost a science to it. How it's written. And you just keep studying and where did it come from? And then you start realizing that the book that's only like 100 pages long, you can do like an entire thesis trying to understand what was written. So the same thing, but in business, they teach us investing, and the first thing they do is say, okay, well, there's the financial statements. Let's get the numbers. We'll put that into this spreadsheet. Oh, let's look at the historical growth rate. There's the growth rate. There's the margin. Let's project what we think. We'll use something reasonable based on what's going on in the world and some assumptions. Okay, that's what it is. And then we'll use a discount rate. Let's see what the beta is, and we'll figure that out. And
Yep.
there we go. There's the discount rate. There's what I think the cash flow is, and it's all come from the financial statements, and we'll spit out what we think the company's worth. But that you missed the most important step, which was reading through those statements and listening to what they're telling you and what they're not telling you about the historic information. And therein lies the magic. And if you first, and many CPAs, look, they, and there's nothing against them, but they don't necessarily think through what the numbers are saying and not saying in as detailed a way. And that's okay. I mean, that doesn't make them bad CPAs. It's just, that's how it is. And so we are looking for a certain type of individual who's very curious, knowledgeable about what the rules are. But the more you understand what the rules are, you understand how they can be twisted. And there are no rules. They're standard.
Mm-hmm.
There are no regulations. They're standard.
Principles-based standards.
That's right. Principles-based. And so I always, the example I use is that it's like saying you should come to a complete stop at a stop sign. Well, what does that mean? Complete stop at a stop sign. Does that mean stop for 3 seconds? Look, or 4 seconds, or 1 second, but only if it's, I came to a complete stop for like a split second. Was that enough? And so all of these things, but if there was nobody around and it was 2 a.m., what is a complete stop? Because I could have, I was ready. Officer, I came to a complete stop.
It's like the speed limit on the 401, 100 kilometers an hour. Is anyone ever going to get a speeding ticket for going 105? I don't think so.
Probably not. Exactly.
So, you talked, you mentioned about Nortel, about when you put your foot down, things vibrate and there's implications. What you do, again, you're going to research companies. In some cases, you'll produce perhaps positive things about that company. In some cases, you'll perhaps point out some things that are not so good about that company. How do you deal with the stress of, especially in that latter case where, again, people might not like what you write? It comes with a certain amount of stress, including potentially, letters from lawyers and things like that. It's not an easy gig at all. You need to have a serious backbone in order to be able to do that. How do you be able to deal with the stress of really going through that? Because over time, when you were a young whippersnapper and you put your foot down, no one could hear you. Now, when you put your foot down, it's a totally different situation.
Totally. So I guess, first of all, the emphasis is, or the concern has to be borne, and the weight of the implications have to be borne before and measured before we publish. So we spend an if necessary, an inordinate amount of time to make sure that we get it as right as we can. It can never be perfect, but the point is, are the facts that we're bringing forward, are they supported? And if they are, then what we've done is we've interpreted those facts to come to our opinion. But we start with the facts. All facts end up being interpreted, and then you make a conclusion and an opinion based on it. So that's how we do it. How do you get comfortable? Well, it just comes with time. And frankly, I believe that when we write something and it's we're again 100% factual, and the company gets upset with us, we've never been wrong in those circumstances. And the angrier the company gets, the more right I know we are.
Yep.
And so that's what I rest on. And I've been through situations where I felt, my partners have felt like we've been at gunpoint with the client, with the company we wrote about. And frankly, I stare at it and I'm like, you have nothing on me. Like
Yep.
and I've been yelled at and called names. And I'm like, why? But I've testified in court once and I had that. And I'm like, why are you getting angry with me? I have no emotion about this. Is not personal.
Yep.
You're upset, and I understand why, because if you say something about my business, I take it as though it's my baby. But at the same time, I have to recognize that it's my business. It's not, you didn't say anything about me. You didn't say anything
Yep.
about my children. You didn't say anything about my family. That's okay.
The other thing I wanted to ask you, Anthony, now people might be wondering, listening to this, why are we talking about, the 1990s? And I think we're going to get to that, but things go in cycles. And you've been through a number of cycles. And one of the questions I want to ask you, Anthony, is that whether it's the .com, whatever it might be, how do you keep an independent mind, and not kind of get caught up in the run? Because the other thing with accounting, in a lot of cases, the accounting can't keep up with the industry. Is that the industry's valuation will probably go up before the underlying numbers in those financials go up along with it. So, you're trying to reconcile perhaps this large valuation of a particular company. And when you go back to the financials, it's just not there. Now, maybe it's not there because the company is overvalued, or maybe it's not there because the numbers just haven't caught up yet, that the numbers are coming. And I'm just wondering, you've seen a lot of different technologies and waves and things like that come through. How do you kind of reconcile those two and kind of keep an independent mind through the whole process?
Well, I keep an independent mind. It's interesting. I think I figured this. This kind of came to me this morning. It's funny. I was having breakfast with my good friend Stu Kedwell, who's the CIO of RBC Global Asset Management, and we were talking about this. And I was going over how it is, like, there has been so much money made over the last 6 months buying, these left for dead storage companies, other chip makers, and even the data center providers, the chip makers, all this stuff. And we didn't buy it in any of our funds. I didn't say anybody should buy it.
Well, there
I'm
was an
not.
article. It's funny you bring that up, Anthony, because I saw an article as well about teachers and how much they're actually going to make on the SpaceX IPO. And the number is stunning. The fact, they invested whatever, and that was 6 or 7 years ago, right? So it's the numbers that are being thrown around here are stunning. Sorry, I didn't mean to interrupt. Please continue.
So I'm not. And what I've realized is that the fact that I'm not good at seeing those early trends of potential things that are going to go well, or that the market is going to perceive as being sensational, because I'm not good at picking those situations. I don't get sucked in by them and get maybe fooled. I don't want to say fooled, because it's all about, you buy something at 1 and sell it at 2 or 3 or 4 or 5. There's nothing foolish about that.
Mm-hmm.
Holding it from 5 back down to 50 cents could be foolish, but only in retrospect. Anyway, you could say that I'm foolish, that I didn't, here I am commenting about all the concerns about NVIDIA since 2023, but, not owning it, and I never said sell it yet, but, from 2023 till today, the stock's gone up 5-fold plus, more than that. Like, it's so, and so I think, how you keep your head is that I guess it's just like it's in my DNA and it's not that I'm negative. I'm actually extremely positive person, but when I see something that could be too good to be true, I'm very quick to identify those situations. I walk down the street, frankly, and see businesses set up, restaurants, whatever it might be, that are B2C. And I'll tell my children, this is not going to work. That business is not going to work. David T was one, and Freshie and all those. I saw them setting up, and I go, this is not going to work.
Yeah. Well, the thing is with a lot of these businesses as well is that if you have a lot of people competing for the same thing, in a lot of cases, there's only 1 or 2 that'll actually make it through the ringer.
Yeah.
Now, the way Veritas, the other thing to talk a little bit about is the way Veritas thinks about their portfolio and how you look at companies. Veritas does not have a hold setting.
That's right.
It's maybe just talk a little bit about that, because I think that also kind of explains a little bit about, how you think about companies. But why is there no hold setting for Veritas when you read their reports?
I think all those, the way the capital markets has evolved stems from their biases, or their bias stems from how they get paid. They make more money from underwritings and from corporate finance work than they make from the investors doing trades.
Yeah.
So as a result, they want to help investors make money. They don't want to not help their customers make money, which is with the investors. But that's not their main form of earning income. So
Yeah.
remember, you show me the incentives, and I'll show you the actions, and that's basically what's happening in this in the capital markets world. It's not bad. It's not good. That's emotional reaction.
Yep.
What it just is. And so if you, as an investor, are looking at it, you go, well, yeah, it says sector perform. What does that mean? It says sector underperform. Well, what does that mean? It says hold. Well,
Yep.
what does that mean? Well, it means that they probably have a concern about the company, but they didn't want to say something that might offend the company that they're writing about. Because if they
Yep.
do, then they'll lose access to management, they'll lose oxygen, they'll lose the next underwriting, whatever, and then that's a problem. In our case, we don't get paid by the companies. So
Yep.
our only goal is to help client investors make better investment decisions. That's our mission. That's our goal. Okay. So everything we do is that direction. So
Yep.
that's why our recommendations are, as we try to make them as clear as possible. You should buy this. Wow. That I think it, and it should be done, like that you can explain it like with a crayon, right?
Yep.
And this one you should sell. That seems to make a lot of sense.
Yep.
And then this one, is a reduce. And what does a reduce mean? Well, reduce means you own 10, you should own 9, not 11.
Yep.
And again, very clear. There are issues, but those issues are not catastrophic. They may become catastrophic. They may be short term. I'm not sure. But at this point, it's not something I'd be adding to. And so that's where it came from. That's why it exists. And that's how we use it.
So when you guys look at companies, you've been looking at companies for, like you say, 30 years. What are some of the warning signs that you would look for, Anthony, that, perhaps the company is maybe not worth as much as the stock market says they're worth?
Well, and you made a comment earlier. I forgot. I wanted to clarify. You said that accounting doesn't keep up with the valuation or whatever. Accounting is designed, like, again, everything has a purpose, and when you understand the purpose, then you can comment on whether it's good or bad.
Yep.
Or which should more mean, is it useful or not useful? And so accounting is a mode of communicating historical performance of enterprises. Period. It's not intended to help you determine which stocks you should buy today, sell today, how you should value them necessarily. It is one input into making investment decisions. But that input is looking backwards, not designed to look forward. I have sat with many when I was on the board, and I'm talking, on the international board. I chaired the Capital Markets Advisory Committee, which is like a group of users, portfolio managers, analysts from around the world. And I kept saying, we got to stay in our lane. We're writing about what happened yesterday. That we can audit, that we can get comfortable with and give judgment. We're going to tell management and give an opinion on what they think the TAM is, or what they think the market potential is, and all this stuff. We're stepping out of our lane. And when you step out of your lane, that's when you make mistakes. That's when you leave yourself exposed. And so that's a problem. Anyway, I wanted to make that point because you had made that, you had alluded to that in the previous question. So now let's get
That's a
to the
great point.
question you asked me just now. What did you ask me again, quickly?
When you're looking at companies from the outside
Right.
in, when do you start to get concerned?
So you get concerned, and again, there's some 1,500 and 5,000 stocks in the U.S. market and 1,500 in Canada or something. You're not. All of them are not frauds. All of them are not cheating. All of them are not, stocks that probably are not worthy of being purchased at some price. It's and so I hate painting, those that paint broad brush and everybody's criminal and all that. That's not the way it works.
Mm-hmm.
The thing is, because they are standards that use professional judgment and they're principles based, like we talked about coming to the stop sign, and that means that there's a lot of gray area.
Yep.
And so that means that once again, if you're going to understand the financial statements, you've got to start first by understanding what are the objectives of those that are preparing the statements. What are the constraints? Sorry, what are the facts first of behind the transaction? What are the constraints? And then what are the objectives of the company or the management? Who's preparing the statements? Well, if the objectives of the management team is to show higher earnings, well, they will make choices where possible to ensure that they present those facts within the constraints so they can get their objectives.
Yep.
And again, is this bad? It could be bad at extreme, but faced within the rules, everything's okay. Everybody listening to this podcast finishes their taxes every year. Given the choice, because taxes is a very interesting, it's a great sort of metaphor, an example for this, because taxes are filed voluntarily. Taxes are filed according to certain regulations and require significant judgment. Now, when you put the number in, you could put a different number. It's up to you. You sign the bottom of it, okay?
Yep.
Only you know what the real number is, because even if you use an accountant, you'll tell the accountant, this is what I spent, this is what I did, and they will fill it out for you. Now, if you choose a lower revenue number or a higher expense type number, you will pay lower tax. And if your objective is to pay lower taxes, you will make decisions such that those facts will be interpreted within the constraints such that you get your objectives.
Yep.
That is exactly what happens if the company is $1 million worth market cap or 5 trillion market cap. And that's it. And the other point to remember is that companies don't run themselves. People run companies. We want to understand, we started talking about the Leafs. You want to know why the Leafs are where they operate the way they are? Because their objective is not to win the cup. You need to kind of go right at it and go, wait a minute, 68 years, 69 years. How can you get out of bed and never win 69 years in a row? Because it didn't matter. Because that wasn't their objective. Their objective was to make money, create an entertainment that people would want to bring their significant other to go to.
Yeah.
And so when you look at a company, the things that right away trigger for me is I'll say, well, wait a minute. They've made, I'm going through note 2 or note 1, which is the accounting accounting policies and estimates. And I'll go through that and I'll see that they've made certain choices. And I said, well, they didn't have to do that. They chose to do that. Interesting. Why did they choose that? Well, that's a more favorable outcome. And that one's a more favorable outcome. And that one's a more favorable outcome. And this one is actually different than all the other peers in that same group.
Yep.
Oh, boy. that's interesting. So now it's starting to tell me, like, again, some choices leaning one way, okay, some leaning the other way, okay. But when they're all leaning one way, then I know management is all in to make sure that I interpret the facts of what happened in their company over the past year and prior in a certain way.
Yep.
And so then that's right away we're hitting what we call flammable items. And those are a bunch of flammable items.
Yep.
And then we say, okay, what are the things that management's doing? How do they compensate themselves? How is the business structured? How have they made decisions in the past? How do they evaluate the success and failures within their business?
Yep.
How do they then, to the extent now a lot of these are coming to be flammable, there's a lot of flammable things, then we go, okay, you know what, we probably should have a discussion with management. We don't talk to management prior to us having done our work, right? We want to be first having done all our work, and then we're going to start
Yep.
focusing on asking management questions. And then when we ask management questions, my favorite answer from management is, everything you need is in our public filings. Okay, now I know with near 100% certainty that I'm right, that there are problems with this company, because they're basically, they don't, in other words, they're not good at doing research because they didn't research us as an organization or me and know that the only reason why I'm asking this is because I
It's not in
know.
there.
I've already read this. What do you think? I just came up with this. Like, we already read the statements. We know what's there. That's why this question was so pointed. And you're telling me I can get the answer from the statements. Well, that means you don't want me to know. And that's
Yeah.
okay. Again, you don't have to tell me. So, or my team. And that right away spins off that I now see that that's how these people are. And so we should probably be more cautious.
So let's take a couple of really good examples that you've been very involved with. Tell us this little bit of the story of Nortel. And again, I would encourage people to think about this and saying, not the reason why we're going to talk about Nortel and Valeant is not necessarily because of what happened in the future. It's because these things tend to repeat themselves over time. And, you know, I think with capitalism, there might always be room for, you know, cooking the books. And capitalism hasn't changed over the years. But Anthony, take us a little bit back in time. Nortel Networks, you know, the largest company in Canada by a mile. Now it doesn't exist anymore. Take us back in time on how that process kind of unfolded for you.
Well, there's a great book that I should read. Called Popular Dilution, The Madness of Crowd. What that book talks about, examples since the beginning of time, bubbles. The common element of all bubbles, first of all, you only know it's a bubble after it pops. But, and I'm still looking for the book. There's so many books I have. You have a whole stack of books on this side too, and then on the other. Oh, here. No, I don't have it. I probably pulled it out and give it. So this book is a history of all the bubbles in time. And you know what the most common element of all bubbles is? What is the most common element in all bubbles? One thing. You can only give one.
So I'll get like groupthink in terms of everybody believing it's positive. Am I on the right track, Anthony, or am I not?
Totally. Yes, you are on the right track. The common element is people. People are there. And people, you know, we want to believe. People want, they want to make money. And people also suffer from or revel in envy. And why is social media so powerful? Because it's preying on your envy. When
Yep.
I show you that I have, I don't know, something, and I'm eating dinner in some fancy place and I drove a fancy car, I'm showing off, which is what humans love to do. And then you look
Mm-hmm.
at it and go, I want that.
Mm-hmm.
Well, it's no different than I made a whole bunch of money on
Yeah.
my trade. And then my buddy made a whole bunch of money. And then you go home and then you got to put up with your spouse or your significant other or your children going, Mom, Dad, how come you didn't make so much money? How come
Yep.
you didn't do that? How come we don't have such a nice car? How come our house is so small? How come we can't go on these trips? And all of that breeds, puts you and makes you vulnerable to getting sucked in.
Yep.
It's really simple.
You're 100% right. Oh,
It
no, no.
doesn't
You're like,
matter if we're talking about tulips, if we're talking about salt, if we're talking about airplanes, cars, steam engines, the internet, houses, AI chips. It's all the same.
yep.
All changes, them things that seemed revolutionary, changed the world. And here we are. We feel we can't miss out on it.
Yep.
And so we get sucked in with all this FOMO. And so I think that is the key thing that makes it get out of hand. And so we're when you go back to Nortel, there's a number of things, but so Nortel was spun out of a sleepy company called Bell. And all the Bell shareholders were given shares of Nortel, which they didn't even realize. Okay.
Yeah.
Bell was, a stock that was, you could hold it from the beginning of time. It paid you
Absolutely.
nice dividends. And this is before times of the internet. You have to understand, and everybody paying attention here, listening, many will not even realize what it was like investing when what you had to do was get something called a newspaper,
Yep. Yeah.
or you'd get a book, and that book would get published like once a month. I still have the book, the red book. Do you remember the red book from BMO? It published this book once a month, and it had every company in the TSX, and you could see a short summary of all its valuation statistics and a commentary from the analyst and stuff. And this became like a Bible.
Yep.
And then, they talk about when Warren Buffett was doing it, he would go and have it all summarized, handwritten, and then he'd compare, but he had to get the numbers. Today, you hit a button and it gets all calculated for you.
Yep.
But does that make your decision process better? Does that make your outcome better? Not necessarily, because it just leads to a faster decision, but it could be a faster wrong decision.
Yep.
And that's why market movements today are that much faster,
Yep.
because people can make decisions faster or feel they can make decisions faster because
Yep.
they're given answers more quickly. When you ask AI a question and it gives you an answer instantaneously, faster than you ever imagined, you go, wow, that must be right.
Yeah.
That has to be right. But you only know the shortcomings of the answer if you're an expert and have already thought through what could be the answer before you ask it.
100%.
I was taught long ago, when you're interviewing management and when you're interviewing anyone for anything, you always ask questions you know the answer to. And you mix in a few questions that you don't know the answer to.
Yep.
You always ask questions that are open-ended. You never ask questions. You try to stay away from questions like, what day is it? Friday. Like, that's too easy. I need the person to hang themselves with the answer. And so you open-ended questions, you always pretend like if it's a hard-hitting question or it's a lob ball question, You always ask it the same way. You always have the same expression. You never show that there's emotion, that something made you angry. You
Yep.
always are smiling, okay? You want to get good at being an interviewer? Watch TV, watch these shows where they have the cops asking questions to the criminal,
Yeah.
right? They want to be your friend. You want to make them your friend. So the thing is about Nortel. All of these things are relevant to all the bubbles, all the
Yep.
things that got out of hand. But the thing about Nortel was it was spun out, so you had all these holders of Nortel, which were sleepy, and then all of a sudden it had buried in it this networking cable, and that became something that was going to be used to create connectivity so that
Yep.
they could have something which became the internet. And I'm not so sure they knew it at the time in 1996 when they first spun Nortel out, or 95, something like that. And then they made a series of acquisitions because no one would have a problem lending money to anything to do with Bell, because Bell had
Yeah.
such a history of
Yeah.
being so conservative and so well run. It was like it was practically a company that which was Canada.
Yep. You're right. I agree.
Alexander Graham Bell, who's a
Absolutely.
Canadian, came up with
Absolutely.
the phone. So
Absolutely.
that's why it's called Bell. Again, when you know history and you know context, everything makes more sense. Anyway, so Nortel ends up with this great technology, and lo and behold, it's in Canada. Well, Canada is a small market. So all of a sudden, they started marketing their great ideas and their great capabilities to the US. Well, the US market is more than 10 times our size, okay, from a capital market standpoint. And so when they did that, Americans said, "Oh my God, look at this. These guys are producing the optical cable, which we're going to use
Yep.
to connect the world on
Yep.
this new thing called the internet. Okay, we got to buy some of this. How do we buy some of it? We'll sell shares in the U.S. Then they started making U.S. acquisitions. Then they started doing marketing shows in the U.S. And the stock got higher and higher. And it got way ahead of itself for Canada. And
Yep.
then look at what happens. Again, you got to understand the context of stocks. They don't operate in isolation. So when you have an index fund or you have an index and I'm managing a portfolio and I need to beat the index, okay, you pay me to beat the index. Well, if Nortel becomes 40% of the index, I have a very difficult decision to make. If I own it and it's 40%, I'm good. I'm with the index. They talk about this index hugging, okay? This is what causes index hugging, because I need to be there. Well, if I'm all of a sudden I go, I don't believe this. This doesn't make sense. It's getting way ahead of itself. I'm not going to own it. Well, 1 quarter passes, 4 quarters pass, 6 quarters pass, and you're way underperforming. Now, all of a sudden, the seat that you're sitting on, it's like, that game of musical chairs. Somebody wants to pull it out. Why? Because nobody wants to buy your fund. Nobody buys your fund. That fund company doesn't make any money. You don't make any money. You don't have a job. It's
Yep.
like, it's so simple.
Yep.
And so then they got to buy it. And then they tell 2 friends, and they tell 2 friends, and they tell 2 friends, and they tell 2 friends. And then envy shows, and then the FOMO comes in. Well, I got to get there. And then you got all the, companies that are all starting to go public that are related, and they go
Yep.
public, and they capture the interest of investors. Oh, I know you missed out on Nortel, but you got to get in on this one. So they're in on it, and then so on, and then it just builds
Yep.
until something happens, and you never know what it's going to be. Somebody wakes up and goes, wait a minute. Is anybody going to make any money from this? Like, you didn't make any money? I'm talking the companies now, not the investors.
Yep.
It's important. Watch the screen. Reality and the economy is way over there. You can't even see how far my hand is. And the stock market is way over there. And you can't see where that is. And
Yep.
so everybody says, oh, everybody keeps talking about having a recession. How come the stock market keeps going up? Because the real economy is doing something. That doesn't mean that the stock market index is going to do the same thing. The index in Canada, 230 odd names, they're not weighted the same way as the Canadian economy.
Yep.
24% of the index, 26% is banks. Another 7 or so, 10, 8, 10 is other financial type businesses, insurance, private equity, private credit, all that. Then we
Yep.
have, some 20% in energy. We got some 20% in materials. Is that
Yep.
what our economy looks like? No. Our economy is 70% consumerism. So when the economy's suffering, it's because Joe Sixpack and Stevie Winebox are suffering and
Yep.
don't have a job and can't make payments, and the economy's slow. Not because Royal Bank is losing, is missed its earnings or is
Yep.
making its earnings. Like it's a different, it's related, and they can have times when they cross and
Yep.
move in the same direction, but many times they're like this.
Yep.
So, investing is not just about knowing the statements. The statements is one input. Understanding all these other intricacies is what investing's about. After 30 odd years of it, I've been investing. I bought my first stock in 94. So that's like 32 years, right? And so every day I learn something new. And every day I realize that I don't know anything. And I realize how hard it is. That's why what I can tell you that we're really good at is finding flammable item in companies' financials and not just their financials, but in their press releases, in how they present their press releases. That's very important. What do they start with? What do they focus on? What do they not want to talk about? All those kind of things, these subtleties is where the magic is.
And Anthony, in the case of Nortel, was there one flammable item that stood, head and shoulders above the rest that really, I don't know, it was the straw that broke the camel's back or whatever it was, but was there one thing in there that you said, man, this is the one thing that's really going to change, or was it really just a combination of a whole bunch of different things?
There's always that one thing. I think for Nortel, it was really, yes, for Nortel, it was that they weren't generating any cash.
Yeah. That is
and-
probably a common theme.
Well, it is and it isn't. NVIDIA generates, 100 billion in free cash last year. So I would say, and all the hyperscalers are generating oodles of cash. They historically have the best cash flow generation of any kind of enterprises
Yep.
ever, because
Yep.
they're extremely capital light. That's why the market has been so enamored with them. The story, you have to always try to focus to understand what is the story. And the story behind this current market has been so strong. It's hard to argue. Anthony, this time is different. These companies
Yep.
generate cash. It's not like Nortel and Lucent and Cisco and JDS Uniphase and 360 Networks and Callnet and so many others that didn't generate cash at the time of the .com. You're right. True. It's not like the time of the great financial crisis where we had CDO squareds and other leverage type of structures to finance all these mortgage deals on the housing. No, you're right. It's different. It doesn't have that same. But what it does have is people believing and continuing to believe that everything is fine, even though when they step back, they go, some of this stuff might not add up. So Nortel was really, they had great earnings. They grew through acquisition. At the time, in the beginning, we didn't really know that they were cooking the books. I mean, they were using an old trick, buy and hold, but the disclosure was not good enough for us to know that they were
Yep.
using revenue recognition tricks. We knew that the AR turnover was slowing. We could see that the inventory turnover was slowing. We could see that the company wasn't generating cash. So those are the kind of things that we could see. There was an
Yep.
indication that something was happening, but we didn't know they were doing buy and hold until a couple of years later, and then they started talking about the revenue recognition, and we said, well, that we saw through these symptoms. Remember, those are all symptoms.
Yep.
The sickness was the buy and hold.
Yep.
The sickness was offering long-term credit to your customers.
So then you get through Nortel and you say, well, this is never going to happen again. And then we have another one, Valeant, which also rose up, I think, at one point to be one of the largest companies in Canada. And at one point, I think you were having coffee, I think, with one of the folks from the Globe and Mail when it was at its height, and
Yes.
you were saying, look, your belief is that this is overvalued. Is it a different fact pattern at Valeant, or it's the same, kind of had those same characteristics as Nortel?
I think that the people that were running Nortel at the beginning, John Roth and the team, were not devious, were not bad actors. They were caught in a market frenzy. They did what the market wanted, and they got caught up in it. And they figured the buy and hold and the long-term receivable. Well, look, the internet's going to take off. All our customers are going to be making oodles of money. They're going to be able to pay us back the receivable. Everything's going to be fine.
Yep.
In the case of Valeant, I think these are bad, these were individuals that were setting up an organization to deceive. They changed their so that I think is the difference.
Yep.
And I interviewed the guy, Bill Campbell, Jim Campbell, and he interviewed Madoff before Madoff killed himself, and he wrote Madoff Talks. It's in Netflix, and I interviewed him on my podcast, The Fact Finders.
Yep.
And I like the way he characterized it. There's two types of frauds. There's the fraud like Nortel, which doesn't start out as a fraud. It was a great business that basically got over, like it had to keep treading water, and then the water got higher, and then it had to put flippers on and that you couldn't see, and then the flippers didn't work, so then it bought like an engine, it put in a motor underneath that you couldn't see. That's, think of it that way. Whereas Valeant, from the very beginning, in the third quarter after it merged and with BioVale and started in this new public company, it changed its key performance metric, how it calculated non-GAAP earnings. And then 2 quarters after that, it changed it again. And then it would make acquisitions and not be clear about the accounting that it used when it made the acquisition.
Yeah.
And then it would change its presentation of different things within its financial statements all the time. And we would make noise about this. We'd say this, that we know they're hiding some. Well, we could. It looks like to us that things could be being hidden, given that they've changed the presentation. Then they changed the segmented results. Then and so on. So they, like, Pearson was a master of, he's dangerous because he was a consultant who from McKinsey, who understood the industry, understood what investors wanted, and he went and took over the company. He wrote a paper. This is what you guys should do, and then he grabbed hold of it and ran it.
Yep.
And we know after. I mean, the poor guy. Like, look, these are people. Like, I'm speaking poorly about this individual, but again, I don't think he got a family, all this kind of stuff. Was he a bad man? I don't know about that. He wanted to make money. He wanted to prove to the world that he could create this empire called Valeant, and he wanted to make a statement to the pharmaceutical industry that R&D was a waste of money.
Yep.
And, in a way, he did waken up the industry that they have to stop wasting capital. So he did, there are positive things that came out of that, okay? But he, ended up by the end of it, we don't know this, but he ended up that he was an alcoholic. He had gotten all kinds of DUIs, and had been a big problem in meetings internally because of the alcoholism and all that stuff. The stress got to him. I mean,
Yeah.
look,
That's stressful. There's no doubt
being in
about
this
that.
business is stressful,
Yeah.
and you have employees, you have investors, all that kind of stuff. Anyway, so did I answer your question about what's different? Well, I
Absolutely.
think that's a key point that's different. And what brought down Valeant was something different. It just was. It actually happened in 2016. That interview that you're referring to was in 2015, at virtually the peak. It was still going up. But the company eventually, I think it was, it was during the election campaign. Hillary Clinton tweeted that there was that we had a problem. They had a problem in the U.S. in the pharma industry because companies were just raising prices,
Yep.
and that was really hurting Medicaid and Medicare. And she hinted that the biggest culprit was a company with the name starting with a V. And all of a sudden, and at the same time, people were had already started to question the results of Valeant, and the growth had started to slow. But the stock market was holding it up. But then when that came out, everybody said, "Oh, so now, so the stuff you were talking about, Anthony, you mean that they were just buying a company and they would just increase the price of the product and then just sell through? That there was this convoluted network of pharmacies that would basically make up transactions." Anyway, afterwards, when something starts to unravel, that's when people start asking questions.
Yep.
As long as everybody's making money, nobody wants to ask questions.
So you look in the Canadian landscape. We just talked about two. There's others like
Oh
Breax
yeah,
would
we've
be
been all
another
over.
one.
Whether it was Bombardier and Celestica and Yellow Pages and BioVale, and the market's littered with so many.
So when you look at it today, what are your thoughts in terms of, you have a lot of new technologies, like you say, maybe a difference now is these, like these, say these hyper accelerators are actually generating a lot of cash. So maybe cash flow, isn't that indicator that it was, 20 years ago, at least applied to these type of specific industry. But given your perspective on the marketplace today, do you think that we're in for, another, are we in a bubble or are we not in a bubble?
We only know we're in a bubble after it pops. So we're in a period of extreme exuberance, and one where many types of flammable things, issues, are being looked over. And I don't know how bad the downturn will be, but when the market participants wake up to the fact that there's a lot of circular type transactions taking place, which may or may not be even allowed within accounting, but let's just say that they are, then what it all boils down to is likely that the growth rates that are being presented by the players within the tech, especially AI industry, are overstated. Or said another way, they're not overstated, they're just not sustainable. And when the market realizes that, then they'll start to question everything. Now, the difference this time is these companies, many, the hyperscalers and the chip makers, some of them, NVIDIA, let's leave it at that. But the other ones, I'm not sure they have the staying power. But NVIDIA does have staying power, the balance sheet, the cash flow statements, etc. are strong. But eventually, when something ends up, it's going to depend on earnings. You saw yesterday Broadcom results, they miss. All of a sudden, there's a wake-up call. Wait a minute, whoa. And the miss, again, think about this. The market wanted $60 to $80 billion of chips. They said it's going to be like 56. Like 56 billion, the growth rate from last year is like math. But
Yep.
that's not what the market wanted. The market wanted 60 to 80. Everything is about expectations, not
Yep.
about actual relative to expectation. So in this case, why I think this time could be very painful, and the pain will be different. The pain that was experienced in the financial crisis was more widespread than it was in .com, both because the market is more proliferated, more people are involved in investing, but also, and more people understood investing. Today, why I think it could be very painful is that there's so much money in passive. And I think, I do a presentation, and I've been presenting this year a presentation, and we did a whole training session, which I think we also did for your guys, related
Correct.
to all the accounting tricks that we're seeing happen within the AI players. And
Yep.
what I'm seeing here is that they're doing tricks that to keep the growth rates up. And because there's so much passive investing, when the market rolls over or just has a small hiccup, nobody will understand what's happening. Like today, the NASDAQ was down 4%. Well, if you are passive, you're down 4% and go, wait a minute, why am I down 4%? I didn't do anything. These are like, what happened? And if it goes down again, another 2%, well, now you're down 6% from that Thursday price. Now some of the people that are passive might go, whoa, I don't want this. I want out. And so then they sell. Well, then when you sell the index has to sell those same names. So now those other names fall and the index falls further. And then they tell two friends and they tell two friends and so on. That rollover can become very aggressive despite what the underlying fundamentals are doing, despite what's happening in the market. And, I'm here talking to you, and here we're talking, and you guys, most are going to listen to this, you're at Constellation, and you guys have experienced exactly that. In the last, since August, or let's say a year ago, the stock was double where it is today. Since that time, revenues have grown, the business has grown because you've made acquisitions, earnings have grown, cash flows have grown. There hasn't missed a single quarter of expectations, but the stock's in half. Now, so you're probably sitting there wondering, well, why is everybody, you always ask the most important question to ask in life is why? Always. And so you ask yourself, why? Why? Because the market is always shoots first and asks questions later. So it does that on the positive too. Oh, I got this new technology, baby. We're going to change the world. We're gonna build robots. We're gonna have self-driving cars. Everybody in the world is gonna drive the car that we produce. Sound familiar? I'm gonna take people to Mars, and people buy it, and the stock goes higher, right?
Yep.
And they don't ask questions. They just buy and don't ask questions until something goes wrong. And then all of a sudden, they say us up the escalator, down the elevator. But on the way down, it's similar. The moment the market catches wind that something might be wrong in the future, and it's always, let me play with something that for all my CFAs paying attention here, right? The valuation is partly the period that we set up as our forecast period. And you guys are really good. So you're doing like 10 years, which no one does, but let's say 5. So let's say do a 5-year forecast term. Well, but the business is a forever thing. So what is most of the value buried in? Well, the terminal value. Well, the terminal value, if most of the value is there and you just change the growth rate by 50 basis points. Do that with your valuation, and you'll see how much lower you get for the price.
Yep.
Like, we can make things make sense of what the stock market's doing. If you want, I can do that. I can get very technical with you, or I can talk about sentiment things. And so that's what the market's doing, and that's what it does. I'm going to leave you with this thought. It's like the Wizard of Oz. Okay, it's one of my daughter's favorite movies was the Wizard of Oz, and I don't know how many times we watched Dorothy with the red shoes and the whole thing. We're going to see the wizard. But you think about this: we're off to see the wizard, right? And the wizard is like some superior human it's gonna get him a heart, right? And get him and give him courage, right? And all that. All things that, how do you measure if you have a heart? How do you measure if you have courage? Well, only the wizard can do that. Okay.
Yep.
So they're willing to go through all kinds of scary experiences to get to the wizard because they believe. But then when they get there and they realize at one point that the wizard is just the same guy that you saw at the beginning of the show, who's actually the swindler on the street that cheated the people out of he's the side magician on the street. Nobody's willing to travel anymore, and they're starting to question their own belief. And then they realize that they had all the courage and all the thing already in themselves. And so that's the point. Leading up to any excitement, you're willing to pay a lot for it. And then you get in and you realize if it was exciting or not. And then you go, well, I know before coming into the show, I was willing to pay 20 times my price of the ticket. Then I went to see the show, and it's like, shit, I paid 20 times too much.
Yep. Yeah, like you say, Anthony, it's a perfect way to finish. End of the day, you don't know.
Expect that, eh?
Well, it's true though, and it goes to what you had said before. Is that, look, you don't know if you're in a bubble until it bursts. You know what I mean? And I think that is certainly, we've been both in enough bubbles, and we've seen them burst. And it's certainly an interesting time in the stock markets. You have all these new type of companies and new technologies that are supposedly going to replace all those white collar workers at some point in the future. But in any event, Anthony, thank you very much for joining us today. Your perspectives, as always, are extremely good. I would encourage people to check out Anthony and his team's research at Veritas. It's terrific. Check out his podcast, Fact Finders. I think you talk about independent thinkers. You just had David Thomas on, who had wrote a book on Prem Watsa. Also, a terrific business with Fairfax, and a guy also who's got strong opinions and has, not afraid to share them and sticks through it through thick and thin. But it's a great Anthony, story. Thank you very much. This has been, what's that? Sorry, say that again.
No, that's a great story. And the other one I did recently, Ken Kershaw, he runs a think tank looking at affordability and demographics in Canada. It's a very worthwhile listen.
Yeah, you've got a whole bunch of them. How many interviews have you done? You've done a ton of them.
About 140.
Wow. Yeah, no, that's. I would highly encourage you to check out Veritas and all the research and related materials. So, but Anthony, always fun. Go Maple Leafs, and we'll chat soon. But no, thank you very much for taking the time this afternoon.
Thank you, Scott. All the best.